Go. And we are live. This is Travis from Carter Cow Capital, Trade with Travis, and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Monday morning. It's the day after the Super Bowl. Hopefully, let's be able to make this a super week for each and every one of y'all that are actually watching this live and being able to go through your trading journeys and everything else like that. It's been a slow couple months. The markets have been in constant consolidation, trying to be able to figure out what's going on when it comes down to the movements. May end up affecting people that end up using automation systems. If you have your own trading strategy when it comes down to consolidation, you probably end up winning in some of these areas. But either way, we're going to talk about all of that stuff plus more. Getting into it. So let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from that education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, as we go through and get everything else situated, what I'm going to do is just open up the economic calendar and make sure that I can be able to show myself onto the screen so everybody can be able to see, say hey, and everything else like that. Hope everybody's doing very well. Hopefully your team ended up winning last night. Congratulations to obviously the Chiefs when it comes down to NFL football and them winning the Super Bowl. Congratulations to Andy Reid and everybody else like that as we go through and get everything else situated. Also, just making sure, just let me know if you can be able to hear my sound. Let me know if my sound is good as we are going through and kind of getting everything else situated. And you want to be able to hop inside of the chat. Make sure that you end up saying, hey, it's always good to be able to talk to people. Obviously, the first day of the week, the Sunday to Monday trade is always my favorite trade that you can be able to take throughout the week. So we're going to see if we can be able to start the week off right by being able to find the best opportunity to be able to get in. Also, be able to talk about the one that we end up losing on, which is US 30, unless you end up getting out of it early when it comes down to that movement. So from an economic calendar standpoint, there's really nothing today. Remember, this is the third week of the month. Typically, the third week of the month is where you're going to end up having a little bit more sparks kind of fly, and you're going to end up having some more high impact news that may end up hitting. But going into today, we've got GDP that's going to end up happening for Japan. On Tuesday, we're going to end up having climate count and unemployment rate, which is basically like non-farm payroll for Great Britain. We're going to end up having GDP for the Eurozone. Then after that, we're going to end up having CPI data that's going to end up coming out for the United States. That's going to end up having it at 13.11. So we're probably going to end up seeing that right around, that end up being right around 1 o'clock, 1:30, going into Tuesday. So we should see a little bit of news that should start to spark and kind of fly when it comes down to that on Tuesday. But going into Wednesday, let's see what's happening. Why is my chart like this now? We typically have it to where it's all week. Let's see. I don't want to look at recent and next. I want to look at this week. There we go. Apply filter. It should always be the same. Wednesday on the 15th, we got retail sales. It's going to end up coming out. It's going to end up happening right around 1:30 as well. And then after that, we got President Lagarde that's going to end up speaking on Wednesday. Thursday, it's going to end up being shallow. And then after that, Friday, it's going to end up being even more shallow when it comes down to overall news. So it's for some reason my charts are a little bit different than what I've been using before. I'll make sure I have it set up. There we go. Okay, cool. So from an overall economic perspective, of being able to look at it from a chart perspective, it's not going to end up being that much information that's going to end up pushing the market. We just got to keep that in mind as we go through and kind of make a decision. I will go ahead and go through the United States dollar index. We'll talk about oil. We'll talk about gold. And then after that, we'll talk about US 30. US 30 was a trade that we ended up taking on Thursday. If you end up staying into the trade that whole day, you actually end up having a 1% loss when it came down to that trade. Market ended up hitting the resistance and then after that fell back inside. But we will talk about that plus a few other things. But let's go ahead and jump right into what's happening with the United States dollar index. United States dollar index is in the middle of a transition trade, meaning that the weekly and the daily are basically in the buy zone, which means that we should expect that the United States dollar index should start to get a little bit stronger overall. Now, Last week, what we ended up seeing was an indecision candlestick after we ended up having that breakout 2 weeks ago. We're starting off the week, at least at the beginning of the week, looking like it's going to end up popping up to the upside. But that this candlestick right here is still considered to be indecisive. And because it is considered to be indecisive, sometimes when you end up looking at it that way, you may end up saying, okay, well, or the market may end up turning around. We can see on the daily perspective, we can see that the daily's in the sell zone when it comes down to the stochastic, but we do have a counter trend line break as this market is starting to make this little bit of a U-turn going up to the upside. Now, what does that mean? We have a breakout. We had a retest a couple of days ago. And now we're seeing the market start to be able to break up and try to go towards these highs. Two things can happen at this position when we're taking a look at this one. The first one is very simple. If the market ends up breaking past 12,864 and closes above it, then after that we can assume that the market is going to start being bullish. And even though the stochastic may end up being in the sell zone, it really wouldn't matter. We'll just see that the market start to gradually start to get up to that 12,960 area, and then after that towards the 13,000 area when it comes down to this overall movement. The second thing that could happen, in particular, could be that this market could start to be able to create another consolidation type of movement, meaning that this market could push up, then after that, try to get right back up to 12,864 or somewhere higher than that. Then after that, make a double top, and then after that, start to reject. And then after that, we have a new range between 12,864 and 12,757 that we have to worry about. If that happens, then that means that we're going to end up being in consolidation for a fairly long time. And actually looking at what's happening from an economic standpoint, there's not enough news and not enough catalyst that's going to end up making the market kind of move. Remember, this is the start of new taxes and everything else like that. So I'm not saying that there's a lot of liquidity that's going in the market, at least from the United States perspective, that could even push the market to keep on going higher when it comes down to that. And mainly, I think some people are trying to be a little bit more safer with their money at this particular point. We'll see. But the markets have been slow from January on, and we'll see if this is going to end up being a big pop and we're starting to see direction, or if we're going to end up seeing another consolidation before we actually start to get into a direction. But for right now, at least this early in the morning, there's nothing to really do at this particular point, but we will keep our eyes out on it as we end up going through. Now, from oil and this overall perspective, oil's been in this large consolidation. Now we're in a secondary consolidation at this point. The larger consolidation is that $70 a barrel is being a support, 82.50 is being a resistance, and because of that, that has made this non-tradable. So Canadian dollar pairs in general have been trading at all, literally since the early portions of November, as this market has started to build out its consolidation overall. Now, once the market ends up breaking, then we should see a large pop to the upside. I'm thinking that it's going to end up going to the upside instead of going to the downside. Obviously, the prices of oil are probably going to end up going up at some point in time. We'll just see that happen. If that does happen, then we're starting to see that it can get up to 86.10. Then after that, to 89.80, and then after that, back up to 94.50 overall when it comes down to that movement. So, matter of fact, not 94.50. We go back to the double top. That'll be basically 94 overall. So we'll see how that one kind of plays out, but I still feel the same way about oil. I'm not going to make a move until this market actually ends up breaking out of that area. And until that actually happens, there's really no reason to jump inside of this trade either. So oil, staying away from it, at least right now, as we go through. Let's take a look at gold. As we take a look at gold, gold ended up having a stronger rejection. We end up talking about how the United States dollar was in a transition trade, meaning that United States dollar pairs should have started being able to make the moves. We ended up seeing this engulfing candlestick that ended up happening a little bit earlier last week, where the market ended up covering up 3 weeks of overall movement to the upside after it rejected off of 1950. Since then, we ended up having a week. Last week, we ended up seeing that the candlestick. We thought it was going to end up retesting, but it actually ended up being a indecision candlestick overall. And because of that, it kind of makes it kind of hard to be able to make a decision, because we can see that clearly that the market ended up rejecting. We can see that the United States dollar index is starting to possibly make a move up to the upside. But what is the catalyst that's going to end up making the United States dollar continue to be strong? Is it going to be retail sales? Is it going to end up being what we're going to end up seeing on yeah, is it going to end up being CPI? Is it going to end up being retail sales? Are we going to end up having good enough numbers to allow the United States dollar as a whole to be a little bit more to be for people to feel a little bit more confident to be able to make a move off of that. If we go back to the 2 hour, we end up talking about two potential trades. The first one was that if the market ended up pushing to the downside, we end up saying that we could be able to look at being able to get in right around 1860. Currently, right now, the market's at 1862. We end up setting this trade up without actually end up placing in an order. So currently, right now, we're still kind of looking at this and kind of being able to make a decision on what's going to end up happening overall. What's going on, Block? And being able to make a decision on what's going to happen on this one overall. I mean, obviously, I would say that the market is going to end up being ultimately bearish, but we can see on the weekly and the weekly of the United States dollar index is in the buy zone or starting to move out the buy zone, but the daily's in the sell zone. So I think that we may end up seeing some further confirmation that the market may end up kind of pushing back up and trying to be still a little bit more hesitant instead of being able to make its move as of yet. Once that happens, then after that, we can kind of be able to make a decisive move. So the Sunday to Monday trade is going to be important, but I don't think I'll be looking at being able to jump in with a full 2% or 3% move off of this one. I don't think it's ready yet. All right, so gold is not going to do anything. Bitcoin did exactly what we thought was what was going to end up happening. Obviously, we ended up saying that we felt like the market had to be able to retrace a little bit before being able to push back up. As we take a look at what happened with the overall movement on this one, weekly, I hate looking at Bitcoin from a weekly perspective, but we'll just do it anyway because I got on the weekly. This kind of a quick backstory. Weekly, the market fell all the way down to 15,000. I think it was like 15,500 was the natural support. The resistance was right around 17,000. We ended up having a strong week where the market went from 17,000 all the way to 20,000 and started to be able to shatter those overall positions where the market had long-term consolidation, which was 19,600, 20,590, 21,400. Then after that, the market ended up pushing all the way up to 24,000. And then after that, slowly started to reject. We end up saying that I truly do felt like the market was going to end up falling. And when it fell back, it had to fall back into these natural areas where it basically ended up finding support or resistance at. So in this case, when the market breaks the support, it's going to find another support. So it turned the past resistance into a future support right around 21,435. If the market continues to fall, it's going to fall down to 21,590. And that would be the first stopping point to be able to see where the market is going to end up going from there. If it falls even below, then it can fall all the way down to 19,663 or even all the way down to 18,240 before being able to make a solid move back to the upside if that's going to end up being the case. Now, we're saying that based off of saying that the United States dollar is expected to get stronger because we can see it from a stochastic perspective, from a weekly perspective. But once again, if there's no catalyst, then the market is not going to move. From a daily perspective, we can see that the daily's in the buy zone. And that's the complete, and it's basically the same thing that we end up seeing from the United States dollar index. United States dollar index, from a weekly perspective, is in the buy zone, meaning that the United States dollar should get stronger. But from a daily perspective, is in the sell zone, meaning that we should look at a little bit of retracement. Because we don't have that time frame alignment where the weekly is going up and the daily is going down, there's really no trade to be able to take. Or it's really no confident trade to be able to take. Now, obviously, everybody has their own styles and ways of being able to trade, but from a swing trader perspective, there's really no confluence to being able to say that we should be able to jump into this trade. And so I'm going to do like I've been doing with everything else, sit on my hands, so see what happens and kind of go from there. Kind of sucks if you're in a prop firm session right now, you're actually going through these overall trades and not necessarily seeing the greatest of spots to be able to get in. Especially if you're still going through the evaluation phase on some of these things. So obviously you got to be patient and kind of see how everything kind of plays out, and hopefully we can be able to get a little bit more confirmation on certain moves to where you can be able to make these movements. But this gives us a lot of chance to be able to take a look at the data and be able to try to squeeze out the numbers that's going to end up being the best for the future instead of for right now, if that makes sense, and being able to go from there. Obviously, all of my coders, you actually understand what I mean by that. We're not shooting for right now. We're shooting for what's going to end up happening in the future. I really think March through June is probably going to end up being our biggest type of output this overall year. The question is, what direction is it going to go to? Now, we end up taking a trade on US 30. And felt very confident about the trade on US 30 if it had the momentum to keep on pushing up to the upside. And exactly that was the complete opposite of what ended up happening. The market ended up, and this is, I'm going to tell you why this is my fault. And obviously, um, I take accountability on every trade that I end up talking about. But we end up having a trade inside of this blue area where we end up saying that we wanted to be able to take the buy entry when the market ended up breaking past this. When the market ended up breaking past 34.180. I think I ended up getting in at 34.200. My stop loss I know was at 34.890 when it came down to that overall movement, because that was basically the last point where the market ended up having to swing low. And then after that, it went from there. Well, what ended up happening was that we was in profit for a little bit, got all the way up to 34,246, and then after that, double topped in this position where it basically ended up doing the same thing right there and right there. And because of that, market ended up rejecting very fast within that overall day. Fell about it basically fell all the way down to the bottom range of this overall movement. So it ended up falling 700 points within an overall session or a day and a half of a session. If you just played this as just a support and resistance type of trade, then you made 700 points off of this one. Me, I was looking at this as a breakout type of movement in that currently, and obviously that did not happen. So lost a certain percentage on the account, but what that does is that it allows us to be able to understand what's going on with the market overall. Because where the market fell, it actually ended up falling there previously. It fell there on January 31st, back in this overall position. So now, clearly, we have a natural support, we have a natural resistance where it's done hit 2 times, and we're clearly in the middle of it. So right now, there's no move to be able to take because there's a 33% chance of where the market currently is right now in this overall position. With the market being right there, there's only a 33% chance of being able to make a trade, which means that automation systems, everything else like that, it actually should be turned off in this position until you actually end up breaking out of it. But now we know where the market is, and now we can be able to accept where the market could possibly end up going in both directions. So if I'm looking at this from an overall perspective and saying, okay, well, we know what the support, we know the resistance is, so we know that we're inside of this larger consolidation overall, but we still got to be able to make money inside of these overall positions. How can we be able to do this safely and not take another 1% hit if we end up taking another loss? Well, it's two things. One, we look at this short position, we'll look at being able to get in right around 33,500. The safest position to be able to get out, especially inside this consolidation, will end up being at 33,150. For the overall short if you're looking at being able to sell it. Now, obviously, the stop loss will end up being above the swing high. Take a look at that from a 15-minute perspective. I don't know what that is yet, so I'm just going to leave it as it is right now. Now, the overall resistance play is still the same trade that we ended up taking a look at before. All we're doing is just bringing up the overall entry when it comes down to a high of that movement. So let me unlock this. Now, we're just saying that now our new entry will be above 34,250, and if the market breaks above that area, then after that we're looking at being able to make that trade. We'll place our stop loss just below the swing low once again and be able to trade from there. We have two positions of being able to get out, 34,700, and then after that 35,400 overall. If the market ends up breaking up to the upside, we have one short trade to the downside. If it breaks below, we're saying 33,150, and ultimately if it falls all the way below that, you have you can be able to trade all the way down to 32,800, and then ultimately all the way down to 32,500 or 32,550 to the downside if that ends up happening overall. So once again, these are more patient plays on this overall movement. Just trying to see how the market is going to end up reacting overall until the market ends up making a pop to whatever direction. There's really no trade to be able to take overall in these directions, but we can start to be able to get it set up when it comes down to that movement, because we know where we want to enter at. Now we just got to know what a stop loss is going to be. Typing a Y, yes, if that makes sense. We lost a trade last week. Market ended up rejecting right after that point, fell down 700 points, actually ended up creating a natural support for us in blue. Currently, right now, looking at two positions, we're still inside of that consolidation, but ultimately, we want to be able to get out right around 33,150 and 32,550 for the shorts. If the market breaks up to the upside, we want to get in right around 32,250 There's two positions, 34,700 and then 35,400 when it comes down to those positions overall. Okay, so feel good about that, but obviously just got to take a little bit of time, see how everything kind of plays itself out, and then kind of play out its role. If you want to be uber conservative and just say, hey, I just want to trade and wait until the market truly breaks out of that area, do not look at being able to get into the market until the market breaks above 34,400. Once again, if you want to be uber conservative about that, do not look at being able to get into NAS 100 until the market breaks above 34,400 overall. Okay, perfect, cool. Last one that we're going to end up going over, unless that one will Ethereum keep a bearish trend? What's going on, Michael Patton? Thanks for being able to pop inside of the being able to pop inside again. Um, let's see. I'll take a look at that one real quick. My Ethereum chart looks ugly. Wow. Okay, it's been a while since I've been working on this one. Everybody, give me one quick second. Let's see. Okay, so the whole kitchen on that chart. Hey, man. Hey, sometimes this chart is kind of funny. I think that I end up cleaning up everything off the chart earlier during the summer, and this is still the same chart from over the summertime when we end up working on it. So yeah, sometimes it can get hectic. All right, so let's talk overall from an overall perspective. From a bearish perspective, this market was still going through a bearish wave. There was a D extension that did not get hit at $722. Do I expect that the market's going to fall all the way down to $722? Absolutely not. The reason why I believe that is because if the market is finally end up breaking this overall counter trend line break or this outer trend line break to the upside. So I do think that ultimately the market's going to end up pushing up to the upside and ultimately getting back up to that 20,000, I mean not 20,000, $2,000 area when it comes down to that movement. But to answer your question, Micro, um, we are still inside of this consolidation block after being inside of multiple consolidation blocks overall. Just like what's happening with Bitcoin overall, I think that it's in the middle of it had one true breakout to the upside. Once it broke out to the upside, it kind of went inside of another consolidation, and currently right now it has to retest that consolidation. So yes, from a short-term trend, I think that there's going to end up being some further downside movement because the United States dollar is expected to be able to get a little bit more stronger. So what I believe is probably going to end up happening is that the market, and because we can see it happen in these three main areas. Do you notice that we end up having a free run area right here, a free run area right there, and basically a free run area right here. So if the market falls again, it's going to fall right back. It's going to fall right back inside of this free run area, where it's probably light volume and fall all the way down to 13,050. Not 13,050, 1350. Jeez. Now what I'm going to do is I'm going to go and take a look at it from our volume profile charts and see if that's going to end up being pretty much the same. But I can almost for certain say that that's probably going to end up happening. Oh, look, from an hourly standpoint, I ended up marking off this one. This was a while ago. Oh, that was early in February. Um, well, we ended up saying that if the market ended up breaking below 15,000, 1516, that the market will fall all the way down to 1430. 1430 was the last time that we ended up having this consolidation in this overall area of moving right there. Good morning, Miles. How you doing? Daddy, what's up, baby? Help me. We're looking at this overall gap in between this overall area. Please don't. Daddy, can you help me? No, baby. Well, you had tablet time yesterday. You need to get up and get ready so you can be able to go to school. Go upstairs so you can be able to take a shower. Good morning. Yes, I believe that we're probably going to end up seeing some further downside movement. We have unfair market prices that's happening right here in this area, which means to me that I think there's going to end up being a little fight from the bulls inside of this area. Let the market fall down to a value area where the consolidation was previously, and this little high volume note right there before ultimately people are looking at being able to buy. Um, so that kind of spells out to me without even kind of looking at the numbers. I think that CPI data, um, I think that the CPI data may end up being good for the United States. I think that retail sales data may end up being okay for the United States. I'm not going to say that it's going to be good, but I think that ultimately what that's going to end up doing is pushing the market down into a value area where people will look at being able to get in and say, hey, I feel comfortable with this overall number if I were to jump inside of it from that overall position. Hopefully, I answered your question. Yes, I do believe that it's going to fall down a little bit more. Now, unless there's something that I'm missing that, um, unless there's something that I'm missing when it comes down to um, cryptocurrency that may end up being big when it comes down to news, I think that we could see it fall again. Um, I got time to do Nas 100. We'll close off on that one. So, Nas 100, we end up placing in an order or talking about an idea overall when it came down to Nas 100 when the market ended up breaking outside of this overall low. The low was at 12,400. If you end up getting inside of that trade, we end up saying that you had two positions that you can be able to get out, but the main one was at 12,100. The second one was obviously at 12,330. Um, if you end up getting out of 12,330, you actually end up getting fulfilled on that one on Friday. It really only took about an hour for that move to be able to take. Market consolidated here, which makes sense now. We can see that obviously the volume is starting to poke out a little bit more when it comes down to this position. If you're still in on that overall trade, um, I would keep my eye on how the market is going to end up reacting at least early this morning because we can see that it's in consolidation. It's starting to push up. So this could be turning past support and future resistance, and then after that, ultimately being able to break down. Or you can see that if it breaks inside of this overall resistance, then it easily can get back up to 12,517 before being able to make a move. Currently, right now, if I'm not in the trade, I'm not doing anything. If you are in the trade, then I probably would look at being able to take some partial profit out and then after that, seeing how the market's going to react. Anybody else that's looking at being able to get in, I would not get in until the market actually ends up breaking past these lows and kind of fulfilling this last little spot right here before doing ultimately anything. And when it comes down to that. All right, cool. So it was a good way to be able to start off this week, even though we really didn't have that many trades to be able to find, but we can clearly see how the market's going to end up reacting. Then after that, we can kind of play off of that. You like what I end up doing, please make sure that you end up clicking on that boost button when it comes down to trading view, and obviously click on that like button and subscribe button when it comes down to YouTube. Thanks for being here to pop in. Got a lot of stuff that's happening this overall week. I'm super excited about it. Um, obviously we end up talking about what's going on expert advisor reviews and being able to take a look at that. You take a look at that channel, you'll see that got a lot of great stuff that's happening with that. Got a couple videos that we're gonna have to end up pasting again. Haven't posted a video literally in a week and a half. I feel kind of bad about that, but obviously being sick and everything else like that, and kind of being unmotivated with some of the projects that I ended up taking a look at because the numbers were off, was different as well. But like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all in the next video. And we'll do this all over again tomorrow. Take it easy.